Hello and welcome to this carrier update brought to you by Powerfleet. I'm here with the one, the only, Zach Strickland. Zach, what are we starting our off with?
Well, we like to lead our day off with our daily dose of outbound tender rejection index just to see if capacity is changing in any way in aggregate significantly. Our blue line here, we've been monitoring it over the last month or so, and it's been unusually high, Anthony Smith. It's 20.3% right now. Downward trend over the last few days, but it's still above where it was in the middle of December, and it's right on par with where it was around Thanksgiving. So this is the big takeaway, is that even though things are kind of trending downward slowly, we are still in a tighter area of existence with the OTRI than we've been, what is traditionally kind of a peak seasonal tightness. So it's unusual to say the least, and Mike Vincent and I were, of course, talking about this before today's episode, and my theory here is that it's a lot of the Omicron illness having an influence here. A lot of people out of their work, drivers, of course. It's not as easy as just saying, I'm going to call in sick. There's a driver that's got to come back into the market. He's got to, drive hundreds of miles away. If they can't cover this load, then that also impacts the subsequent loads thereafter. And a lot of this tightness, we've been talking about it. You've seen our WRI maps, has happened in the Northeast, those huge population centers with a lot of density around them. And again, up there around that Canadian border as well. So the denser your population, the more virus outbreaks you have and things like that. So a lot of disruption there, and it also impacts the shippers. The shippers, you can drive hundreds of miles to go pick up a load. Shipper facility can get shut down, and that doesn't necessarily, impact the rejection rate, but it does impact that driver's availability for subsequent freight thereafter.
And putting this to make sense in my football mind, it's almost like all the players are on the field. It seems like someone gets hurt and you're starting to pull people from the stands. Just like, hey, is there anyone else I can play linebacker or something like that? Anyone else I can come in? Or maybe the coach suits up at that point. I don't know.
And right now it's the punter. Right now the punter is trying to come in and play quarterback. So not a lot of availability because we can't get the drivers in the space to cover the freight that we have right now, as you can tell with this 20% rejection rate existing for as long as it has. 1 in 5 loads for almost like 15, 16 months now, as long as the pandemic has almost been in existence at this point. So there's still just a ton of availability. We just haven't filled those slots yet. And then when you add on something like Omicron, we're not talking about a huge jump. It's just very unseasonable that we're seeing rejection rates in this space this time of year. I mean, you look back at last year, we see these downward trends. The year before that, it's in January. January, just everything loosens up a little bit because activity tends to slow. However, if we look at our next chart, we're going to see that activity has slowed in terms of overall volumes compared to those previous months. But we're seeing a pickup in activity here over the last few days. This is unusual, my friend. This is, when we start to see these jumps in January, maybe the end of the month, which we're approaching right now, but we don't necessarily see this level of increase by any means. And with those rejection rates coming down, I took a little sneak peek at the tender lead time index as well. We are seeing some lead time increases. So some of these loads are moved out into the future a little bit. Shippers trying to get in front of things probably, you get 2 months as a shipper to really have some time to play catch up. January, February before March kind of brings on the seasonal influx of goods and things like that definitely take on, more of a tighter market and throughout the rest of the year. But we haven't had that time off, really. Volumes are still relatively high at this point.
And so adding on to that unseasonable increases, I should say, I know when we were looking at the LMI, one of the really interesting things was that we saw an increase in inventories in December. Mm-hmm. To see this rise in volumes also kind of tells to, I think, some of the activity that's not really seen typically this time of the year happening right now in the market.
Yeah, and that inventory level, when you're talking about all that freight being pushed into a warehouse, you have to continuously move it. You can't just sit there on the coast and then wait for, the freight is coming in all the time. You don't know when your orders are coming in. So inventory management this year, definitely a big thing, and it's probably going to keep these volumes higher throughout a lot of the year, you know, as these shippers are still trying to adjust their inventory levels to figure out what's going to go on with demand. You know, we talk about inflation a lot. Is there going to be some erosion there?
Yeah.
Right now, I think shippers have taken a little bit of time off, and some of this also could be due to COVID. You know, we talk about the carrier impact with the capacity, but a little bit of this here could be due to COVID as well. So, but again, you're looking at year-over-year increases. This was at a higher rejection rate,
Yeah.
slightly higher, but accepted volumes much higher this year. So we've got a lot more freight moving this year than we did last year.
Zach, insightful as always. We'll be sure to check in with you a few more times before the show is over. We're going to toss it back over to Michael Vincent and Kaylee Nix.